Welcome to Business Incorporated on Channels Television. I am Bisi Adibayo. Coming up today, Nigeria's gross domestic product grows 1.94% year-on-year in second quarter of 2019. And Egyptians lament about higher cost of living despite positive economic indicators in the country. Plus, 28th World Economic Forum on Africa holds this week in Cape Town, South Africa from September the 4th to the 6th. Well, let's begin with the latest data from the National Bureau of Statistics showing Nigeria's gross domestic product grew 1.9% year-on-year in real terms in the second quarter of the year compared to the second quarter of 2018, which recorded a growth of 1.50%. The growth seen in Q2 2019 is an increase of 0.44%. And when compared to 2.1% recorded in the first quarter of 2019, however, the Q2 2019 real growth rate indicates a decline of 0.16 points. During the quarter, aggregate GDP stood at 34.9 billion naira in nominal terms, and that's an increase of 13.83% over the performance in the second quarter of 2018 and 9.8% over the preceding quarter. The report indicates that the performance observed in Q2 2019 follows an equally strong first quarter performance and was likely aided by stability in oil output as well as the successful political transition. Overall, a total of 15 activities grew faster in Q2 relative to last year, while 13 activities had higher growth rates relative to the preceding quarter. Well, let's hit the markets now, beginning from here in Africa, where stocks were mostly negative at intraday, except Nigeria's NSE, which appears to be sustaining the gains recorded yesterday. At intraday, the NSE was up 0.07%, while South Africa's JSE was down 0.59%. Meanwhile, South Africa's GDP grew more than expected in the second quarter, thanks to a recovery in mining and manufacturing. Official data shows that the growth in the 3 months to June was 3.1%, and that's after a revised contraction of 3.1% in the first quarter. In Egypt, the index shed 0.36% at intraday, while Kenya closed negative on Monday. It's a similar scenario across the markets in the Gulf region, with the Abu Dhabi index down by almost 1% at intraday, and that's after reports that growth in the UAE's non-oil private sector slowed to an 8-year low in August, with business activity and demand weakening for a third consecutive month. Dubai's index lost 0.46%. Making a U-turn from 5 consecutive days of positive rally. Qatar was, however, up 0.25% at intraday, while Saudi's index shed 0.05%. And in Europe, stocks traded lower early today, with British opposition lawmakers bidding to seize control of House of Commons and stop the UK leaving the European Union without a deal on October the 31st. Orange Bath is standing by to give us more information about this and other headlines coming from the markets. It's good to see you again, Orange.
Hi, good to be back.
Now, all eyes on the UK Parliament and the battle over Brexit heating up. What are the people in the markets where you are expecting, and how's the debate impacting markets today?
I think the expectancies here are up in the air. Nobody can really say how it will turn out. There are so many outcomes. There's a no-deal Brexit, there's a snap election, there's a new government, and the people are just nervous because there's no way of predicting how this will play out. And of course, no way of predicting how it will play out once there is perhaps a no-deal Brexit. Nobody really knows how to calculate the damage. Yes, there are projections, but it's making people nervous. So today, the stock market prices are receding, not by a lot, but pretty uniformly across Europe. If you look here in the DAX or in the CAC 40 in France or in Britain, the losses are around 0.4%. Also, for the Euro Stocks 50, which has stocks from the Eurozone. And where's the money going? You can see the prices for government bonds going up, the yields going down. For example, for the German Bund, the 10-year government bond, reaching a record low today of minus 0.743%. It's so low, I'm having trouble actually fathoming the figure. I'm sorry. Money also going into gold. And it's also a topic, of course, for the brass at top investment banks. People like the chief financial officer for Goldman Sachs, Stephen Scher, saying, well, the Brexit is a pretty serious topic, pretty big risk for the financial system. He says it's no longer a question of how well prepared one is, but how one implements measures once the Brexit takes place.
You just talked about the CFO of Goldman Sachs. He also weighed in on the likelihood of a recession in the United States. Tell us more about that.
Yes, says some interesting things with amazing clarity, I think. He says that the sentiment is going downhill and it's pointing towards a recession. You can't see that in the data yet, in the real economic data, Stephen Scher says, but going by experience, when sentiment goes down like this, then it pretty soon translates into the data because companies expressing this sentiment, well, they're careful on investment, they're careful on new jobs, perhaps they're cutting back on jobs. And that then cuts into jobs and consumer spending and makes itself felt in the economy.
Okay, so all this uncertainty makes for volatile markets, rattling investors, but it's good business on the other hand for stock exchange operators, and Deutsche Börse is one of them, which is gaining membership in the Euro Stoxx 50 index.
That's right, and that's a real distinction. While others are falling by the wayside as German members of the Euro Stoxx 50, Deutsche Börse is going from strength to strength, both in its business model and in its numbers and its share price. When you look at the chart for the Deutsche Börse share, since 2016, when talk first of a merger between it and the London Stock Exchange emerged, it's almost doubled, and the share continued going uphill, continued gaining strongly, even after the merger with the London Stock Exchange was prohibited by the competition people at the European Commission. And alone this year, the shares gained by about 30%. And the Deutsche Börse has a unique business model to take advantage of these volatile markets. It not only earns fees on trading, it also does derivatives, it does custody, it does settlement. So it's in a pretty healthy position to profit from these things, and that translates to a very visible, let's say, prestigious news of it joining the Euro Stoxx 50 now.
Thanks, Orich. We'll see you again tomorrow.
Thank you.